That is a big story that we will be tracking with you this morning. We will be joined by Mitali Nikore and Barnik Chitran Matra. But also on the show, it seems Indian stock markets are bulletproof after Sindoor. Markets closed in the green. War, peace and stock markets. That is a discussion that we will bring for you right here on Morning Brief at 9.
इमरजेंसी की सूरत हाल है हॉस्पिटल के अंदर।
This is Morning Brief at 9. Let's bring you first breaking news, which is coming in just from a few minutes ago. A blast was heard in Pakistan's eastern city of Lahore this morning. This according to a Reuters eyewitness. Now, a day after Indian strikes at multiple locations under Operation Sindoor, the country strengthened fears about an escalation of a military conflict between the nuclear-armed neighbors. Well, these are visuals recorded just a few minutes ago from the city of Lahore, where explosion was heard in Walton area. These explosions were heard in Gopal Nagar, Nasirabad area. Explosions also came from an old airport, as per eyewitness accounts to Reuters. Now, rescue firefighting vehicles have reached the scene. 3 explosions in all were heard, one after another, as per eyewitness accounts. Meanwhile, it wasn't just Lahore. Baloch Liberation Army Special Tactical Operations Squad, or STOS, targeted a Pakistan Army vehicle in a remote-controlled IED attack in Majkund area of Bolon, where they were preparing military operations. 12 Pakistan Army soldiers have been neutralized by the Baloch Liberation Army. Of course, that is a developing story that we will be bringing details of through the day right here on News 9. But first up, let's look at the other headlines that we are tracking for you this Thursday morning. Pakistani troops resorted to cross-border shelling along the line of control in Kupwara district of Jammu and Kashmir for the second consecutive day after India hit terror outfits at Operation Sindoor. Indian armed forces retaliate effectively. No reports of any casualties so far. And in the aftermath of Operation Sindoor, more than 300 flights have been cancelled and at least 25 airports have been temporarily shut for operations amid restrictions in wake of the Indian armed forces launching missile strikes on terror targets in Pakistan. The shut airports include Srinagar, Leh, Jammu, Amritsar, Pathankot, Chandigarh, Jodhpur, Jaisalmer, Shimla, Dharamshala, as well as Jamnagar. India has also closed about 25 flight routes that allow planes to enter Pakistan through the Indian airspace on a day when the Indian armed forces launched missile attacks on terror targets inside Pakistan and along POK. The closure will mean foreign carriers overflying Pakistan airspace earlier will have to take longer routes to reach their destinations. Meanwhile, Indian banks have tightened their cyber security networks to ward off any cyber threat in the wake of retaliation by Pakistan to Operation Sindoor undertaken by Indian armed forces. ATMs have been flushed with funds in the border areas so customers don't face any cash crunch. And on the show, we will discuss war, peace and stock markets. Is SENSEX immune to sabre-rattling? Well, that seems to be the view from ANAND RATHI research. We discuss on the show as markets ended higher after Operation Sindoor yesterday. And moving to other stories, import duty relaxations and eliminations under the India-UK Free Trade Agreement will boost bilateral trade and expand consumer markets in both the countries, as per experts. Remember, India and the UK on Tuesday clinched a landmark trade deal that will remove taxes on the export of labor-intensive products from India, including leather, footwear and clothing, while making imports of whiskey and cars from Britain cheaper. All this in a bid to double trade between India and UK to $120 billion by 2030. Commerce and Industry Minister PIYUSH GOYAL will meet representations of Export Promotion Councils or EPCs in New Delhi today to discuss matters related to the free trade agreement India has clinched with the UK. Global stories that we are tracking for you. Despite Donald Trump's pressure, US Fed keeps interest rates unchanged. Fed Chair Jerome Powell warns of high risk of inflation in coming months. And the selection of the new Pope hits the expected yet dramatic conclusion as the first vote from the conclave burns to emit black smoke, a signal that the vote was inconclusive. Let's begin by discussing the fragile Pakistan economy and the Pakistan economy, which could collapse and is on the brink of collapse for many years now. And look at the data. The data is fairly astounding. As compared to India, Pakistan's economy is just a fraction, a few $100 billion as compared to India. This year expected to become a $4.19 trillion economy. And that's not all. India's forex reserves are enough to cover any eventuality for a period of 11 months as against Pakistan, which has forex reserves which will be able to tackle any pressure for no more than just about 2 months or so. I have two very special guests joining me this morning. Barnik Chitran Metra, PE investor, managing partner of Chrysalis Equity Ventures, and Mithali Nikore, founder and chief economist at Nikore Associates. Good morning. Mithali, let me begin by asking you, this is a discussion we've had earlier, but I think the discussion becomes far more pronounced today, a day after Op Sindoor and Pakistan promising retaliation. How fragile really is Pakistan's economy?
So, Karthik, first of all, good morning. And I think we have to begin by saluting our armed forces, especially the women who led the briefings, and many of the women who participated and led the, efforts yesterday in India's war on terror. And I think, when we talk about the economy, it's one of the most important fronts on which to fight any war and, to fight this particular sustained, Operation Sindoor, because at the end of the day, that is what gives any country the firepower, the means to actually purchase, the kind of defense equipment it needs, the kind of personnel it needs, the kind of soldiers it needs, and the kind of, wherewithal that the economy and the resilience the economy would have is critical. So if we look at the analysis by a number of international organizations, and also, if we look at the market, India's economy has, of course, been very resilient, to Operation Sindoor, in fact, celebrating Operation Sindoor yesterday with the SENSEX rising. But on the other hand, when we look at the Karachi 100 index, it actually fell by 6,500 points in just 1 hour, and they had to stop trading on the Karachi stock market index.
That's right.
That gives you a very good sense of, how unstable things are and how there's so much fear amongst investors who are invested in Pakistan's economy, who want to sell their, equities and get out of the Pakistani markets.
Absolutely. Of course, stock markets are a great indication of the sentiment of the country and its investors. But, if I can bring you in at this point, Barnik, I want to understand from you, there are two very, very critical factors right now which determine how the world is likely to view and react to Pakistan's economy. Number one, of course, is tomorrow's IMF meet, where there is a $7 billion payout, a bailout for Pakistan, which of course India is going to contest, and India should contest and put its foot down on. The second, of course, is last week's event where Moody's has downgraded Pakistan and the debt default rating for Pakistan has actually only become riskier. What do you make of these global events in the context of Pakistan?
So, as pointed out, I think the Pakistan economy is a fragile economy. I think it's recovering from a severe shock from 2 years back. If you look at a bunch of economic parameters, whether it's inflation, whether it's economic growth, I think they've been on the upswing over the past couple of years with a series of measures taken by the government. I think the current environment just puts far more risk to the economy, and I think the IMF bailout is very critical for the economy to sustain. They barely have $16 billion of foreign reserves. They have just managed to control inflation under 10%. And if you look at the immediate economic impact of closing of airspaces, disruption of trade, an economy which was projected to grow at 2.5% this year may actually not grow at all or shrink. So there are severe consequences for Pakistan, and I think let's keep an eye out for IMF. I think it's an unlikely scenario that the bailout will not happen.
Okay.
I think everyone realizes that an economy like Pakistan collapsing helps no one. It also doesn't help India to have a completely unstable neighbor on its western border. So again, the economy is fragile. I think at some time, let's hope some cooler heads prevail at the other side of the border because they have far more to lose from continuing escalation than India has to lose.
Absolutely. Pakistan for sure has a lot more to lose. But Mithali, this $7 billion bailout, this is not the first time that Pakistan is approaching multinational agencies to get some sort of a money to sustain its own economy. It's something that we see year after year after year. If I'm not mistaken, $6 billion has been the total bailout for Pakistan by the IMF over the last 2 years. And now Pakistan goes again asking for $7 billion at some point. Don't you think it is time for these multilateral global agencies to put a full stop on terror funding that eventually, arguably, this money gets used for?
Absolutely, Karthik. And, this is something I've been arguing on your channel for a while now, that we've seen over the last 7-8 decades that, Pakistan has actually managed to access a total of 24 bailouts from the IMF. And in all of these bailout packages, there are very stringent conditions about, structural economic reforms that the country should be taking. However, the kind of oversight that we see on even an economy like Greece, in terms of meeting its structural conditions, we haven't seen those kind of reforms in Pakistan. We haven't seen those kind of scrutiny in Pakistan. And I think it's now time for India to make that case quite clearly that it is important that the scrutiny of the funds, we're not saying stop the funds immediately, because obviously, as Sir also said, I agree, it is a pre-negotiated bailout package. It's very difficult at this point in time to stop it. But at the same time, it is important to go out and say, we would like to have more scrutiny of how these funds are being utilized, of if there is, any sort of channeling of these funds or any sort of leakage of these funds, that is happening in Pakistan. That becomes very critical. Having said that, the second important point is around trade. And the fact that India has embargoed trade with Pakistan is, of course, one step. But India can take other steps also when it comes to trade. And it is about trying to, reduce Pakistan's presence in global value chains, trying to substitute a lot of commodities. The mangoes that Pakistan, for example, exports to the UK are a big source of revenue for the Pakistani economy. But now, with the free trade agreement that India has signed with the UK, it becomes easier for India to actually export its agricultural commodities to the UK. So therefore, this war not just has to be fought on the defense front, but also on the economic front, whereby having more and more free trade agreements, by having more and more international cooperation, by attracting more and more foreign direct investment to India, India can not only make its own economy stronger, but also ensure that the international community is invested in India's growth. And
Right.
therefore, sees the logic of ensuring that financing from international organizations is not used for terror.
Absolutely, Barnik, but this is something which seems to be a problem right now. While the world seems to be bullish on India, India is the fastest growing major economy. We are likely by the end of this year to be the fourth largest economy. However, it seems that there should have been a stronger action, a stronger voice emerging, especially from the United States. Before you answer that, let's listen in to what Donald Trump had to say specifically, urging both India and Pakistan to cease hostilities. This is very unlike what we have seen in the past, in the era of Joe Biden, and before that even in the era of Donald Trump in his first term, and before that Barack Obama as well. Trump seems to be going very, very mellow on Pakistan. At least this is the first reaction that we got.
My position is I get along with both. I know both very well, and I want to see them work it out. I want to see them stop. And hopefully they can stop now. They've gone tit for tat. So hopefully they can stop now, but I know both. We get along with both countries very well, good relationships with both, and I want to see it stop. And if I can do anything to help, I will be there.
So just expecting both the countries to cease hostilities, Barnik, is not enough. At some point, there has to be some global isolation of Pakistan, given that there is ample proof that Pakistan has been the harbor, the safe haven for terrorist camps.
Yes, so I think let's look at it a little bit more from a longer term basis. It is highly unlikely that the US will change nearly 50, 60 years of policy of completely isolating Pakistan. If you look at the current economy and also what they currently do, I think the US has even still today strong defense ties with Pakistan. I think what is significantly different, and this is an approach to the worldview which the US has in previous escalations, particularly after the parliament attack in 2001, you had the Secretary of State and also the Secretary of Defense actually down in India and Pakistan to calm tensions, but you see no action by the Americans this time. So I think if you look at what you're seeing from the Americans is a reflection of their stance, a change of stance when it comes to global politics. I don't think they're eager to play active roles in sorting conflicts, right? And this is evidenced by the kind of statements you're seeing. But if you look at some of the other statements coming out of the US, like including from the ranking member on the Armed Services Committee, which is Republican, which is Democrat Ro Khanna, right? I think there's an increasing understanding that India's response, right, was actually justified, right, which the Americans rarely do, right? So again, I think the Americans are working the way they are. I find it highly unlikely that they'll take any extreme measures because that's not their history. Right. I think their history has been to try to be a little bit of a, I would say, fair broker between the two parties. And even now, I think their intent to wade into a conflict which would escalate right now seems to be low. I don't think we should read too much into it. I would say that it is in the interest of all economies, including us, to see how we can de-escalate the situation. I know we are proud of our economic strength, we are proud of our might, but remember, if conflict prolongs, even India will get affected by investments flowing out because investors look at long-term risk capital. So while we may be heartened by the fact that nothing has happened on our SENSEX, but a prolonged conflict doesn't help India as well, right? So we should be careful before assuming that our economy is strong enough to continue to support aggression going forward. So again, let's not depend on the Americans. Let's also hope for a swift end to the hostilities.
Absolutely. I think it is in no country's interest to have an all-right war, leave alone just India and Pakistan. For the region, a war is obviously going to be catastrophic. But the fact that US seems to be so soft on Pakistan this time around, Mithali, also comes on the back of J.D. Vance being in India at a time when the horrific Pahalgam attacks took place. J.D. Vance was in India on that very day, April 22nd, and yet a soft reaction coming from the US.
No, I think the US is definitely measuring its words. There's definitely a lot of, I think it makes sense because if they have to play the role at any point of a mediator, or if they have to at least broker any sort of back channel talks, it makes sense that, when it comes to press statements, these words are measured. And of course, it is heartening to see even the president vociferous about other things also take this, careful stance. So it just shows you how He's also cognizant of the fact that, his words carry a lot of weight. And, when he's speaking, it becomes very important for both the countries, to listen and to sort of say that, okay, I mean, can we actually rally around the US as one of the brokers of peace here, and de-escalation, of course, is in everyone's interest. I mean, it's not like India wanted this war. It's not like India wanted the Pahalgam attack. It's not like India made the first move. And therefore, it is, very evident that this is a war that India never wanted. Having said that, I do believe that one, military conflict is only one front, and therefore it is very important for India to continue fighting the economic war that has started on other fronts, like the Indus Water Treaty and the fact that, the water will not be flowing to Pakistan, and also looking at how India can continue to isolate Pakistan on international organizations, looking at how it can remove and reduce Pakistan's presence in global value chains. These are very important fronts on which to continue a longer term, fight, if one can call it that. But at the same time, this message is quite clear.
Right.
From the president.
Right. Final word to you, Barnik. We have been talking, of course, about diplomatic strikes that India had taken before undertaking Op Sindoor. And now, a few minutes ago, Mithali was talking about perhaps mango diplomacy with the UK to bleed the Pakistan economy. But bleeding the Pakistan economy is just one little factor, because Pakistan will again go back to multilateral agencies and again get a bailout. So, simply put, is there not time right now for global agencies to come together and say we need to stop funding terror, period?
Yeah, so I think you have to note that Pakistan is a far more complex country, and often the entities with whom the global multilateral agencies are dealing with are not the entities which control these actions, right? But if you look at it 3-4 years back, when Pakistan was put on the FATF grey list, right? It was a series of sustained pressure which actually forced a bit of reform in the economy. But again, if you look at Pakistan, unfortunately, has a lot of non-state actors who have their vested interests. I think they have a military-industrial complex which often has interests in prolonging conflict, right? So while you can have the multilateral agencies take a much more harder stance, right? If you take too hard of a stance, you actually weaken the only sources of good in the economy, which often is the civilian administration. Right. So again, there is a tightrope to be walked, right? Because at the end of the day, it is rarely the case that the civilian administration or the government often knows what's going on, and all of these actions are often taken in the dark. Penalizing them excessively because they are viewed as custodians of the economy often can have the opposite effect. So I think multilateral agencies should continue to hold them accountable. I think the Financial Task Force, the FATF, should continue to crack down, and if there are evidence of a diversion of funds away from development activities to financing terror, that should be notified. Maybe stern warnings should be given. But at the end of the day, it's not just the multilateral agencies. I think the Americans, the Chinese have to get together to see that some of this doesn't continue going forward, because it helps none of them. It neither helps the Americans nor does it help the interest of the Chinese, who are significantly invested in the economy, if the economy collapses. So I think there has to be sustained pressure from all ends, including India diplomatically, economically, but also some of the largest powers in the world, notably the G7, have to step up to ensure that some of the root causes of the issue, which is beyond the control of the civilian administration, is affected. And they put their foot down. I think, to be fair, how much of these things actually go on with the knowledge and even consent of the civilian administration, people don't know, right? Right. So this is a difficult problem to solve, but I think I agree with Kali's point of view.
A difficult problem to solve indeed, but civil administration, a civilian government, I'm not very confident. Barnik, as history has shown us, in my opinion, it'll continue to still be a puppet of the army, the Pakistan army. But Mithali, Barnik, thank you so much for taking time out and joining us here on News 9. Pleasure having you as always. And with that, we will slip into a short break. Coming up on the other side, Feroz Aziz, Deputy CEO ANAND RATHI, will be joining us to help us understand this trilogy of war, peace and stock markets. And are Indian stock markets indeed bulletproof? You're watching Morning Brief at 9.
बेबो का एक ही रूल, रोज खाओ अंडे विदाउट भूल।
Cause eggs are cool, cool, cool. Yes, eggs are cool, cool, cool. Summer में energy हो जाती है कम, खाओ अंडे energetic रहो हरदम। Strength और power मिले हर रोज with proteins and minerals का daily dose। Eggs are cool, cool, cool. Yes, eggs are cool, cool, cool. Yes, eggs are cool, cool, cool.
संडे हो या मंडे, रोज खाओ अंडे।
Smashing corporate boundaries through sport. The News 9 Corporate Badminton Championship 2025, in collaboration with Padma Shri Pulela Gopichand, offers corporations a unique opportunity to boost employee engagement through sport.
It's a perfect blend of fun, fitness and competition. So I invite all the corporate people out there to come to the court and showcase their passion for sports as well.
Top corporates are already in. Are you?
Presenting sponsor, Srinidhi University, Kindle the Light Within. Co-powered by Tata AG, with you always. Venue partner, Gopichand Academy. Sports medicine partner, CSSH, Center for Spine and Sports Health. Associate sponsor, Blue Star, built on trust. Dinshas since 1932. D-Beats, a diamond is forever. Tata New. Celebration partner, Big Bull, the future of clubbing.
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching Morning Brief at 9. Let's get you the mood check as markets opened just a few minutes ago. As again, like we saw yesterday, there seems to be a flat trading day for the markets. The markets seem to be completely unfazed by what is happening on the border. SENSEX Nifty red, if you can call it, but second decimal points just 0.02% down. SENSEX still holding well above the 80,700 mark. Nifty50 above the 24,400 mark. Volatility as expected in the markets is a little high in early trading hours, but remember, all this could change as hours go by. Joining us today is a very special guest. Feroz Aziz, Deputy CEO, ANAND RATHI Wealth, joins us this morning. Feroz, good morning. Interestingly, I was reading a report by ANAND RATHI Research, which very clearly tells us that Indian markets seem to be completely bulletproof. Let me take you, I'm sure you've read this report if you haven't, already contributed in great magnitude to it, but just look at the salient features of that report. Sensex was up 106 points yesterday, Nifty was up 35 points yesterday. Markets have been resilient no matter the tensions. Indices since the Pahalgam attack have been up about 1%. Past conflicts have had limited impact. Domestic macro sentiments seem to be driving the markets. Corrections have been short and sentiment driven. Investors focused on fundamentals, their earnings and liquidity drive market and not borders. And in the past, we've seen quick rebounds and no real structural impact. Now, your report also says, Feroz, that average correction in tensions has been just about 7.5%, and a war-like scenario may take it on the outside to about 10% or so. Also, interestingly, India has outperformed the S&P 500 in crisis-like situations. Interesting research, interesting pointers coming at a point like this. So, I want to begin first by asking you, Feroz, the Pakistan stock market, the KSC 100, is going through pretty much the same turmoil and the same stress that perhaps the Indian market should. What is making Indian investors and the Indian market so resilient?
Karthik, good morning. Like you rightly pointed out, data clearly points out that, especially now if you go by the India-Pakistan tensions, there were 4-5 instances where the mean and the median correction was just about 3%. By the time on the first day, second day, there have been more corrections than yesterday. But over a period of the full conflict or the high heated zone of time, markets have recovered and they've just been 2-3%. And this time also it has been like that. Now comes the question, why so? See, what happens is, generally a news this determines its power by the time it comes. Now, let me give you an example to break it down for an investor. Satyam fiasco broke out in the early 2009. On that day, you would be surprised, one of the largest companies in India is declaring that we fraudulently reported our balance sheet fixed deposits. That, in my mind, was one of the biggest shake-up, and FII should quit India because it can't trust any of the top companies also for something so trivial like a bank FD. On that day, you'd be surprised, SENSEX fell 1.5%. And then I started doing this research. Why so? On such a big news, how can SENSEX fall 1%? That's because it succeeded a global financial crisis.
That's right, the subprime crisis of 2008.
Yes, 18,000 SENSEX had already come to 10,700. If the same news would have come in September 2008, this news had the power to pull down the market by 10%, 15%.
That's right.
So it's
so
not
are you
just the
suggesting, Feroz, sorry to cut you short, but are you suggesting that news on India, UK, FTA and the other global cues that we are picking up, India continuing to be the fastest growing economy as per IMF and Moody's, and of course, India looking at becoming the 4th largest economy by end of this year, are all these positive cues offsetting the potential negative impact that we could have otherwise seen on the basis of escalation on the border?
Yes, Karthik, but that's part 2 of what I was trying to get to.
Okay,
one is fundamental. The other is demand and supply. See, on a daily basis, fundamentals don't play out. What plays out is who has come to sell, who has come to buy. Are sellers more desperate to sell, or the buyers more desperate to buy? That will determine where the price settles.
Right.
So first, on the demand and supply bit, since we have already given away 4 lakh crores to FIIs on the pretext of valuation, there is a lot of selling already done. If this news came in July last year, this news could have given you a 5-7% on a specific day, because FIIs were still to sell. We've already sold it. Now coming to the fundamentals don't play out on a day-to-day basis. See, because in the market every day, the amount of money which comes into the market is equal to the amount which goes out. So how many of the purchases, how many ledgers got debited and monies went to another seller, that amount of stock comes and that money gets credited to the seller. So money in and money out is equal on any given day of the market.
That's the equilibrium.
On who is more desperate?
Right.
Is the buyer more desperate or the seller?
Absolutely.
From a fundamental standpoint, like you rightly said, Karthik, there are so many good newses which are offsetting this news on a 15-day, 1 month, 2 month basis. That determines the rebounds. The rebound depends on fundamental. The fall depends on demand and supply. That's when you see the Trump trade war didn't have a long-lasting impact on Indian markets, because the fundamentals supported and sanity prevails, and then buyers over the next 10-15 days see that as a buying opportunity rather than a selling opportunity. So I think you're so right. If you see the GST numbers, 2,37,000 crores, the highest ever in April, 13.7% growth in direct tax collection, inflation at 3.6%, the real GDP of the last financial year of 6.6, which is estimated after the 4th quarter comes in, on a pace of 9.2 of the previous year. So all these have contributed to rebounds. And one more very important demand and supply, which is there is limitation on the short. On any bad day, if my short limit is limited, if I can only short 2,25,000 Nifty, and I can't sell more calls, I can't buy more puts, I can't sell futures beyond 2,25,000. Each individual in India has that limit, and people have already exhausted that limit. So where will fresh shorts come from?
Fantastic, Feroz. That's the best masterclass anybody can expect. A 5-minute masterclass on why Indian stock markets seem to be bulletproof in this volatile and uncertain times. But Feroz, I want to understand from you, if tensions were to escalate and if we were to see retaliation from Pakistan and some sort of a longer term skirmish, if not an all-right war, was to ensue, what happens to global investors and global investors' sentiments looking at investing in India?
I think global investor sentiment, see, there are 3 kinds of FIIs. FIIs who are index fund investors, they invest on behalf of crores of human beings. That's one category. They have not sold India at all. They have just bought India over the last 2 years, and there's enough evidence. And if you go threadbare, who are the vanguards of the world? Anybody who's following MSCI Emerging Market Index or the India Small Cap Index has only bought. Ikka dukka, some people would have sold because of redemptions. Now, so that's one which is not going to be quitting India anytime soon unless their investors quit their funds, which is not happening just because there's a conflict between India and Pakistan. So that's second part, are those investors who invest in index, but they invest on their own behalf. Like quite a few US institutions, like the Harvards of the world, have their pension funds invested in emerging market index, if you look at their reportings. So that's the second category of FII. The third category of FII, which is the most fluid money, which is the hedge fund investing, that has 80% quit India. That's my estimate. So if you break down FII, which is called FII, all three have a very, very different behavioral pattern. So to come back to your question, what will happen to FII sentiment? The FII sentiment is already dampened, and the hedge fund guys, there are quite a few, there are about 12, 15 who are very, very popularly known for trading stocks, not holding and buying stocks. They are very light today. I think the second category, which is investing on their own behalf in index, is also redeeming. But the index fund investors like the vanguards, if you see their reportings in the UK, you will be very happy if they follow FTSE, that they have not sold one share of India.
Fantastic. So that is the mood that can be expected from FIIs going forward as well. I want to quickly pull up the Nifty50 Heatmap, Feroz, and get your views on, despite the markets being mostly flat, there seems to be some pressure today on specific stocks and big pressure. HDFC Bank is down about 1%, Maruti Suzuki is down about 1%, ITC is down about 1.2% or so. What are you making of these sudden falls in some of the very, very specific stocks, even though the overall mood of the market seems to be flat?
I think these are all capital allocations changes. Now, if you see, the banking space has been little resilient, but 9 banks have declared their results. 94% of the Nifty bank has already given results. The results are 3.9% weighted average so far, 6 more percent to come. So you will end up at 4% earnings growth for Q4. The fee incomes have also taken a hit. So I think there is some degree of capital reallocation, because at an index level, if you see, the index today is down 30-40 points, which is probably not even 0.1, 0.2%. But there's a lot of inter-Nifty movement happening. That's point one, because there are some surprises, especially in result season. This kind of capital changes happen when people are disappointed or have their results estimates not being met. So that's one thing which happens, especially in the first 2 months. And the June month is going to be a little slower in terms of recheck. That's point one. Point two, if you look at today being an expiry, of course, a weekly expiry, you see the straddle is practically at no price, 50-60 rupees on a Nifty. That means you're going to get a flat day today. So I think it's more inter-Nifty capital reallocation during earnings season, which is always seen.
Fantastic. Well, let's leave it at that. Feroz Aziz, thank you so much for your inputs and the value that you bring to our viewers every time you're here on the channel. Thank you so much for taking the time and being here with us on Newsline. And before we slip into a break, let's look at some of the global stories that we are tracking for you this Thursday morning. US Federal Reserve keeps interest rates unchanged as inflation and job market risks grow amid Trump tariff pressures. US stocks rise as Fed holds interest rates steady, and chip makers rally on report of Trump reversing AI chip curbs. Meanwhile, Chinese stocks rise as hopes grow for US-China trade breakthrough ahead of high-level talks in Geneva this weekend. US Vice President J.D. Vance says Trump administration seeks direct Russia-Ukraine talks but rejects Moscow's war concessions as too demanding. Canadian Prime Minister Mark Carney tells Donald Trump Canada will never be up for sale as the two leaders discuss tariff and trade issues in the first White House meeting. The European Union plans to propose tariffs on Boeing jets as part of broader trade retaliation strategy against the US, targeting $100 billion in imports. BMW confirms its 2025 outlook, expecting US tariff to drop in July, but warns of a notable impact on second quarter business amid geopolitical and economic uncertainties. Obesity drug maker Novo Nordisk cuts 2025 sales forecast after disappointing Wegovy sales and US prescription stagnation, indicating potential loss of market leadership to Eli Lilly. And sneaker shoe brand Skechers goes private in a $9.42 billion deal with 3G Capital, marking largest ever footwear industry buyout amid tariff concerns and volatile market conditions. We'll get to these stories on the other side. You are watching News 9.
Mama must be missing us, nah?
Let's take you on, spin, give me one day. Feel the itch under my skin, it's a one day. You believe it when you see me and done, hey. It doesn't matter, just gotta get going.
New GT line, Taigun and Virtus. Volkswagen.
Smashing corporate boundaries through sport. The News 9 Corporate Badminton Championship 2025, in collaboration with Padma Shri Pulela Gopichand, offers corporations a unique opportunity to boost employee engagement through sport.
It's a perfect blend of fun, fitness and competition. So I invite all the corporate people out there to come to the court and showcase their passion for sports as well.
Top corporates are already in. Are you?
Presenting sponsor, Srinidhi University, Kindle the Light Within. Co-powered by Tata AG, with you always. Venue partner, Gopichand Academy. Sports medicine partner, CSSH, Center for Spine and Sports Health. Associate sponsor, Blue Star, built on trust. Dinshas since 1932. D-Beats, a diamond is forever. Tata New. Celebration partner, Big Bull, the future of clubbing.
Welcome back. You're watching News 9. This is Morning Brief at 9. The US Federal Reserve has kept interest rates steady on Wednesday, but signaled growing concerns over rising inflation and unemployment. Remember, the Fed hasn't touched its policy rate since December, but officials say uncertainty is mounting. Listen in to what Jerome Powell had to say.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. There's just so much that we don't know. I think, and we're in a good position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see the administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take. But for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
All right, Jerome Powell there. Now, in a bid to ease trade tensions between the U.S. and China, U.S. Treasury Secretary Scott Bessent and top trade negotiator Jameson Greer are set to meet with China's economic czar He Lafeng in Switzerland this weekend. The talks come after months of escalating tariffs that exceeded 100%, which have rattled global markets. The question remains if this meeting marks the first step towards ending the deepening trade war or not. Take a look.
Chinese stocks got a boost Wednesday on glimmers of hope that a trade war with the US might just be set to ease. Benchmark indexes in Hong Kong and Shanghai were up around 0.5% by early afternoon. That followed news the day before that the US and China will hold talks in Geneva on Saturday. US Treasury Secretary Scott Bessent and Chief Trade Negotiator Jameson Greer will meet Beijing Economic Tsar He Lifeng. The meeting will come after months of escalating tensions that have seen both sides impose tariffs way in excess of 100%. Now the two countries are expected to discuss reductions in the broader levies, as well as possible exemptions for specific products. Speaking on Fox News, Bessent said he thought the talks would focus on de-escalation. Appearing earlier Tuesday in Congress, he said no negotiations were yet underway with Beijing, but raised hopes of deals with other countries.
I would think that perhaps as early as this week, we will be announcing trade deals with some of our largest trading partners. They have come to us with very good offers.
However, Trump himself sent a slightly different message, saying he would review any potential deals over the next 2 weeks before deciding which ones to accept. Chinese officials confirmed the country would re-engage in talks, while also warning there could be no deal if there was any attempt at coercion. Beijing has previously said it would never kneel to what it has called US blackmail. But economists predict the trade turmoil could sharply cut global growth, ramping up pressure for some kind of agreement. Analysts at Japanese bank Nomura have predicted the tariff wars could cost China some 16 million jobs.
All right, and moving on now, Canadian Prime Minister Mark Carney made his first visit to the White House for talks with US President Donald Trump. In a direct message, Carney told Trump that Canada would never be for sale. The meeting came just days after Carney's victory in the April election in Canada, where he pledged to stand up to Trump's aggressive trade policies, including the tariffs on Canadian goods. Take a look.
Canadian Prime Minister Mark Carney met with U.S. President Donald Trump at the White House on Tuesday and said in their first face-to-face meeting that Canada would never be for sale.
It's not for sale, won't be for sale ever, but the opportunity is in the partnership and what we can build together.
But Trump, who has said repeatedly that Canada should become the 51st state, was not giving up on the idea.
Never say never. Never say never. I think it would really be a wonderful marriage because it's two places that get along very well. They like each other a lot.
The talks between the two leaders came just days after Carney won the April 28th election on a promise to stand up to Trump, who has imposed tariffs on some Canadian products. Trump said that he and Carney would discuss, quote, tough points at their meeting. But afterward, Carney confirmed to reporters that no decisions had been made on tariffs.
As I've emphasized, it's a complex negotiation. There'll be zigs and zags, difficult aspects to it, but the prospect is there.
A senior Canadian government official said Carney's private lunch with Trump after the Oval Office meeting was constructive. And according to that official, Carney told Trump the tariffs did not make sense.
The tariffs are, in our view, not in the interests of American competitiveness and jobs. We have more work to do on making those cases.
German car maker BMW confirmed its 2025 outlook on Wednesday, expressing optimism about the reduction of some US tariffs on car imports starting in the month of July. However, the company warned that these tariffs would have a notable impact on its business in the second quarter. BMW also highlighted the growing challenges posed by geopolitical and geo-economic uncertainty, saying the current level of instability is something they have rarely seen before.
BMW confirmed its outlook for this year on Wednesday. The German car maker said it expected some of the US tariffs on car imports to drop off from July, but it still warns that the duties will have a notable impact on second quarter business. BMW said geopolitical and economic uncertainty had reached a level they had rarely seen before. The car maker added it was closely monitoring the impact on consumer sentiment. Most of BMW's rivals, including Mercedes-Benz, Ford and Stellantis, have all pulled their yearly forecasts. They argued it was too difficult to come up with proper guidance due to far-reaching import tariffs in the US. But BMW said the outlook it provided in March had factored in all tariffs announced up to that point, and it still stood. The automaker forecast earnings before tax on par with last year. Investors liked the noises coming out of BMW Wednesday and shares rose over 3.5%. They were also pleased to hear BMW report better than expected first quarter EBIT of $2.3 billion at its auto unit. The unit's operating margin reached 6.9%, down from last year but above analyst projections. BMW cited strong orders and cost discipline for the number.
Well, California-based sneakers and comfort shoe brand Skechers has decided to exit public markets after 26 long years. This as a result of steep US tariffs. Skechers is now all set to go private. The sneaker brand has agreed to be taken over by investment firm 3G Capital in a deal valued at $9.42 billion. This marks the biggest ever buyout for the footwear industry globally. Take a look.
Skechers is to go private. The sneaker brand has agreed to be taken over by investment firm 3G Capital in a deal valued at $9.42 billion. That marks the biggest ever buyout for the footwear industry. The move will see Skechers shares stop trading after 26 years on public markets. Its stock jumped 25% on the news, but is still down on the year. The company last month withdrew its financial forecasts, warning that it faced a big hit from Donald Trump's 145% tariff on imports from China. That country accounts for the bulk of its shipments to the US. One analyst told Reuters the new deal may have been accelerated by the volatile trading environment, with Skechers possibly keen to navigate the turmoil away from Wall Street scrutiny. The company has joined rivals Nike and Adidas in urging Trump to exempt shoes from tariffs, saying the levies will just hurt shoppers. Skechers was founded in California in 1992 and has come to be known for its comfort-focused shoes. It has held up against Nike and new rivals like Hoka thanks to aggressive global expansion and value-led pricing. It has also done prominent marketing tie-ups with celebrities including Britney Spears and Kim Kardashian. 3G Capital is controlled by Brazilian billionaire Jorge Paulo Lemann and is best known for investing in food firms like Kraft Heinz.
Now, despite the backlash from fans and losses that the company faced on account of Snow White and the Seven Dwarfs reboot, Walt Disney's quarterly results are looking like the happiest place on earth, just like its theme parks. Well, Disney's shares surged as much as 12% on Wednesday morning after the media giant exceeded expectations in its most recent quarter. Disney Plus streaming service added 1.4 million customers during the just ended quarter. Disney has also announced plans for a brand new theme park in Abu Dhabi. Here's more.
Disney shares surged as much as 12% Wednesday morning after the media giant exceeded expectations in its most recent quarter, bolstered by an unexpected boost in its Disney Plus streaming business and strong results from its theme parks. CEO Bob Iger said, quote, "Despite questions around any macroeconomic uncertainty or the impact of competition, I'm encouraged by the strength and resilience of our business." Profit and revenue topped forecasts, and Disney announced plans for a new theme park in Abu Dhabi. It also said its Disney Plus streaming service added 1.4 million customers during the just-ended quarter. 3 months ago, it had warned of a modest decline in Disney Plus subscribers following a price increase. Disney, unlike many other blue-chip companies, voiced a lofty outlook for the rest of the year. Amid a shaky U.S. economy, Disney is leaning on its streaming business to grow profits and to expand its popular theme parks and cruise line. The company's chief financial officer said theme park attendance, quote, "is actually still quite good." The lone exception is at Shanghai Disney Resort and Hong Kong Disneyland, where attendance has dropped, which he attributed to the Chinese economy.
And finally, to the disappointment of thousands waiting eagerly on St. Peter's Square in Vatican City on Wednesday, it was black smoke that finally billowed from the chimney of the Sistine Chapel, signaling an inconclusive first vote by cardinals locked in the conclave to elect a new pope. We will leave you with that detailed report.
The thousands of faithful in St. Peter's Square on Wednesday evening were all watching for this moment. Black smoke. It signaled an inconclusive first vote by cardinals, locked in a conclave to elect a new pope. The crowds had to be patient. It took more than 3 hours after the start of the conclave for the signal to appear. Some had been expecting white smoke, the indication a new pope had been selected, though a pontiff has not been picked on the first day of a conclave in modern times.
A little disappointed, I guess, but I couldn't tell if it was black or white, to be honest, because of how dark it is, but yeah.
Of course, we are expecting our cardinal from the Philippines, but sad to say that we haven't had new pope yet.
The 133 cardinal electors, who are all aged under 80, will spend the night secluded in one of 2 Vatican guest houses. They will get back at it on Thursday, holding 2 votes in the morning session and 2 in the afternoon. The process will continue until one man has secured a majority of at least 2/3. 89 cardinals this time around.
In a huge setback for bike taxi services in Karnataka, Tamil Nadu races ahead with 9.69% growth rate, India's fastest growing state this year. Good for Tamil Nadu.